Ladies and gentlemen, good day and welcome to IIFL Securities Limited Q3FY22 Earnings Conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Venkatraman. Thank you, and over to you, sir.
Good afternoon, friends. Thank you for joining the third quarter analyst call for IIFL Securities. I am R. Venkatraman, Managing Director and co-founder of the group. Along with me are Ronak Gandhi, CFO of IIFL Securities, and Anup Varghese, who is the group IR in charge. I also take this opportunity to wish all of you a very happy new year and hope that all your near and dear ones continue to remain safe. We have seen a spike because of the third wave of COVID, but hopefully this risk is getting subsided due to a huge vaccination drive achieved by the government. Broking industry continues to get a boost from significant customer acquisition, not only in Tier 1 but also in Tier 2, Tier 3 and smaller locations, driven primarily by technology. As a country, our broking client penetration is very low compared to 10%, double digit plus in developed countries, indicating a huge potential and runway for growth. Stock markets in January 22 started with volatility and decline because of fears of ongoing lingering pandemic as well as interest rate hikes not only in India but across the globe, especially in USA. Our strategy, as I have articulated in the past, continues to be built on research, technology and people. Because of research, we have an edge in capital markets, and that helps our business lines primarily because all our business lines are centered around capital markets. We continue to scale our efforts to acquire customers and give them a better trading experience. We are integrating best products and services on our platform as a digital fintech ecosystem to ensure a best-in-class experience for our customers. We have 3 revenue streams: retail, targeted and mass market, tech savvy, and we offer not only broking but also distribution of products like mutual funds, insurance, PMS on an open architecture model. We have the other line, which is institutional broking, where we are one of the leading domestic institutional broker, known for our research and ability to execute block deals. And third is investment banking, where we are uniquely placed because of our ability to garner subscription in all the 3 buckets of the IPO construct, be it retail, HNI or institution, and leveraging our strong research credentials. We are focused on the agency business on an open architecture distribution model. Coming to our results specifically for the December quarter, consolidated revenues came at 368 crores, up 71% year-on-year and 16% quarter-on-quarter. Brokerage income has increased 47% year-on-year from 99 crores to about 145 crores. Investment banking has increased 44%, 32 crores for this quarter versus 22 crores for the previous year quarter. And distribution income, which has increased to 56 crores in this quarter versus 37 crores in the previous year, same quarter. And that is primarily driven because of higher yield product sales. On a quarter-on-quarter basis, brokerage income has remained flat at 145 crores. Investment banking has grown 16%, 32 versus 28 in the previous quarter, and distribution income has increased almost 12%, 56 versus 49 in the last quarter. Other income was 32 crores, up 67% on a quarter-on-quarter basis, primarily because of treasury income and investment gains. Coming to expenses, employee cost was up 13% quarter-on-quarter, 61% year-on-year because of increase in headcount and incentives. Employee count, we ended the quarter at about 2,460 employees, which was 2,300 employees in the previous quarter, and that same was close to 1,976 in the last year. Coming to finance cost is up 30% quarter-on-quarter and massive and more than doubled in the year-on-year basis, and primarily because of borrowings due to IPO finance. Admin cost is at 113 crores, up 12% quarter-on-quarter, 58% year-on-year because of sub-brokerage, increase in sub-brokerage payout, and also because of increased spend in technology and marketing. Our assets under custody stood at 1,32,000 crores. Average daily turnover for this quarter was 83,546 crores, which is roughly about 1,850 crores in cash and 81,000 in derivative segment. Corresponding figures for the previous quarter was 67,564 crores, which was 1,770 crores in cash and 65,000 crores in derivatives. And basically, our IIFL Markets app and the AAA app are being used extensively by not only clients but also our partners. 95% of our accounts are opened digitally, and we have also digitized our customer service using the chatbot significantly. Last quarter, we acquired 2,23,000 accounts. So we'll acquire 2,23,000 accounts for the last quarter. With this, I come to the end of my opening remarks and key data points, and the floor is now open to answer any questions that you may have. Thank you so much for giving me a patient hearing.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask the question. The first question is from the line of Rishikesh Oza from Robo Capital. Please go ahead.
Hi, sir. So my first question is, how many customers are we planning to acquire in FY23?
See, actually, we have been acquiring roughly about 2 lakh accounts in the last quarter, and that was roughly about 1 lakh, about 2 lakh in the previous quarter and 1 lakh 50. So my guess is that for the going ahead, although it's difficult for me to make a forward-looking statement, my guess is that a pace of customer acquisition will be ballpark in this range only, 2 lakh per quarter.
Okay. And my second question is, sir, if we see almost all of our competitors are growing very fast, and some competitors are somewhere around doing 600 to 700 crores revenues per year. So in this backdrop where the competition is growing very fast, do we have any internal revenue growth target? Any indicative number will be very useful, sir.
See, actually, to be very honest, so if you look at it, although we have also have internal targets, unfortunately, I will not be in a position to share with them. But roughly, let me tell you the elements of our strategy so that you get an idea what we are doing. First element is that we want to acquire customers, and if you see, we are acquiring about 2 lakh customers in a quarter, and that will remain at the similar levels or maybe go elevated also as and when we streamline the entire acquisition engine properly. The second is we also have a sub-broker network. So our pace of acquiring sub-brokers has increased. We are acquiring about 300 partners every month. So that will also be a element going ahead because we think that we have a pan-India distribution reach, and these sub-brokers enable us to go out and acquire new customers. At the same time, we also have a channel called Premium, which is targeted mass affluent HNI segment. So there we'll be focusing on servicing the I would say the HNI segment. Our aim is that we will continue to make investments in technology and making our app better so that this new millennial, which is the so-called DIY segment or do-it-yourself segment, also improves. And if you see, we have seen some amount of marginal market share gain in the derivative segment, and this was one segment which we had ignored in the past, and we will continue to invest and grow this segment. So effectively, our aim is to increase customers and increase our market share, and revenue is a derived number.
Okay, that's great, sir. But if I see in last 1.5 years, if I see quarter on quarter, we would be maintaining many a times, 20% growth quarter on quarter, or maybe around 15% at least. So is it fair to assume that, quarter on quarter, somewhere these kind of growth rates will be maintaining?
See, on a ceteris paribus normal state, I think that that's a good number, but you have to remember that we are also beneficiary of the state of the overall market. So if you see the last quarter itself, investment banking grew. We had about almost 32 crores from investment banking, and that is a direct outcome of the state of capital markets and the entire fundraise in the economy. So my guess is that you have to whatever assumption you make, it has to be overlaid into one broad unknown variable, which is the state of the market. So on a precisely quarter on quarter, whether these numbers will met or not is your guess as well as mine. But on a longer term perspective, I think we are confident that we are on the right track.
Okay, no problem. And one last question, sir. Sir, could you please give a broad breakup of your 2,375 employees around by department-wise? So, like, we are looking to understand how many are related to the clients or, our clients facing.
One second, I'll just roughly tell you. Roughly, if you look at it now, close to about, out of this two bulk, will be about 75% will be in sales or customer service. And then others are all support. So it will be 75-25.
Okay, got it. That was helpful. Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Participants, you may press star and 1 to ask a question. The next question is from the line of Sahej Mittal from HDFC Securities. Please go ahead.
Hi, good afternoon, sir. So my first question was around the activity which we are seeing on the derivative side. So could you throw some color around, what are your customers doing in terms of, options trading, whether they are the large positions building are on the call side, because, if market turn one side, if market see a very sharp correction, then do we expect these customers to make some sharp losses and these customers can move out of the market, or is it fairly distributed, or are these customers also writing call options or put options? That was my first question. And the second one was around, what percentage of your customers use your research trade basis, you're using your research provided by IIFL Securities? Yeah, those were my first two questions.
So if I can understand your first question correct, you want to get some color on on the options customers, and second was about leveraging our research.
Right.
Okay. Now let me answer the first question first. Now, if you look at our total turnover, I'm giving you rough numbers. Rough numbers is that we do roughly about 82,000 crores of turnover, out of which bulk, maybe 97-98% is options trading.
Right.
And if you look at the entire options trading, we also have a complete mix of people who trade options. So our institutional presence in options is quite less, and so bulk is retail. And within retail also, there are two broad categories, if I can use the word. One is a sophisticated customer who uses algorithms and trades, and I would put him in that category, who's a so-called sophisticated customer. The other is for lack of a better word, called retail customer. So our retail customers also, like in the normal market sense, they keep on buying and selling options. And to answer your question, what will happen if they see losses? As of now, we have seen one side market going up. Post March of 2020, when the market hit a low for the last 2 years, I think we have been having a market which has been quite good. So a huge generation of people wouldn't have seen sharp losses. So your guess is as good as mine. What will happen if they see losses? But let me give you my historical perspective. So what happens is that whenever there's a market crash happens, which is like a significant nature, which happened in say 2001 when the internet boom, the crash happened, or the Ketan Parekh scam happened, or 2008 when global financial crisis happened, or 2013 when the taper tantrum happened. So large number of loose hands get out of the market. But what happens is the level of activity in the market settles at a higher level. So it will be like number of active customers will fall, but it will be higher than the level which you saw in say 2013-14. And plus the other thing is that the retail customer is also becoming sophisticated or maybe knowledgeable because of the entire financial literacy exercise which is being done by everybody. So what happens is most of them do SIPs also, they invest in mutual funds also, they invest in IPOs also, and that's what IPOs has done well in the last 2 years. So my guess is that some of them will obviously exit because of leverage positions and huge losses, but most of them will stay and become I would say, a wiser investor. Coming to a second question about research, we leverage our research. Large number of customers use our research. We also give so-called hedge strategies and calls on Nifty. So, and most of the customers use it, but many of the customers read it, but they don't use it also. So we track, and I think about customers, about 20-25% of the customers use our research, and bulk of them don't use it. But I don't have a scientific basis. This is the sense we get after looking at data.
And so could you quantify, this customer base, like you highlighted that the sophisticated and algo customers, there are two set of customers. One is the sophisticated and algo customers, and on the other side you have simple option buying and selling customers. So what would this mix look like?
I don't have the data right now in front of me. I'll get this answer. Run a quick, let's go.
Sure. And just on the options base, so are we seeing these new customers who have been coming to the market in the last 6 months? So are these customers also writing call options or put options, or they don't understand writing and they just do the buying of call and put options?
Actually, it's a mix of both. Although it's a mix of both. I don't have a scientific answer for that. It's a mix. The people write also, people buy also.
Right. And sir, just one data keeping question. What was your retail broking revenue for the first quarter of FY22?
First quarter or last quarter?
No, first quarter. I have a number for the first half at 189 crores. So if you could give me...
I'll give you some numbers. Q3 ka nahi. 9 months ka I have this right in front of me. Hey, so, this is for the 9 months is 505 crores. Correct, na? Retail broking? 505, which, so it was 200, 170, and maybe 370, 130 will be the number, my guess is. So I'll check and get back to you.
So actually, in your investor presentation, the retail brokerage income is, for the 9 months, shows at 297 crores on page number 7, printed page number 7.
So, no, only brokerage you want, because it is retail broking. This is the number. So this for the 9 months 300 crores, and I have given you 500 crores because it includes demat charges, DPC charges for retail customers, everything, etc.
Got it. And against this 290 and against this 300 crores, what?
Send an email to
for the number.
I'll send you the complete breakdown. How much of the retail broking income for the full year?
Sure. And on the staff cost side, so given that we have in-state equities business as well, so what would the staff cost for the retail business look like?
Retail staff cost is क्या? I don't have the number upfront with me, so I will. One second. No, he wants a split between retail and retail will be roughly. I'll get back to you on this.
Sure, no problem, sir. No problem.
So you want two questions. One, you wanted the brokerage income for the last 3 quarters, on pure brokerage income, excluding demat charges and other charges. And second thing is you wanted to know exactly employee cost for the institutional business.
For the retail business, right? The split between the institutional and the retail.
Done. I'll send it back to you. I'll appreciate if you can send an email to Anup Varghese, then so that you get the answer back surely.
Sure, sir. I'll do that. Thanks a lot.
Thank you so much.
And all the best.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Pranay Javeri from J&J Holdings. Please go ahead.
Hi, sir. Good afternoon. Thank you for giving this opportunity.
Good afternoon.
Yeah. So many congratulations on good set of numbers and great dividend. Thank you so much.
Thank you.
I just wanted to understand this facility and that line item which is quarter on quarter gone from 18 crores to 30 crores. If you can just throw some light on that.
No, I'll just give you one simple line answer for that. This is two income lines. One is interest income and the other is rental income. And interest income is primarily on because of some amount of IPO income which is booked in this. Hello, IPO financing income, part of it gets booked into this.
IPO financing. Okay. And sir, what is your net cash position, sir?
Net cash position is that we have a loan of about 193 crores, cash about 350 crores, so net cash is about 160.
160 crores. Okay. And sir, what is the progress on our real estate asset? We are planning to sell some.
This last quarter we could not sell anything, and as I said earlier also, it's a long-term process, and we are slowly and steadily trying to sell everything.
And the valuation, as earlier in earlier calls you have pointed out, it is in the range of about 550-600 crores, right?
I think it will be in the same range only.
Okay. And any color on this other income part which has rose quarter on quarter and year on year?
See, Mike, sorry, which one?
Other income.
See, the other income which has grown up, as I said in the opening remarks, has gone up to 32 crores primarily because of treasury income and investment gains.
Okay, sir. Thank you so much.
Thank you so much. And coming to your real estate gain. Hello?
Yeah, yes, sir.
Yeah, property valuation will be closer to 600 crores. I think you said a figure of 550 crores. So I would just want to tell you that it will be around 600. That's the only point.
Okay, sir. Thank you so much.
But the 550, 600 is anyway same ballpark.
Thank you so much.
Thank you.
Thank you. Participants, you may press star and 1 to ask the question. The next question is from the line of Ray from BCP Securities. Please go ahead.
Hey, hi. Thanks again for accepting the invitation. Now, this quick one here. We are actually just started to cover IIFL. Now, I'm just kind of it's kind of very vague here for me. Now, I know that there are 3 listed companies. IIFL Securities, are the figures, numbers consolidated with the IIFL Limited? IIFL Finance Limited? Just shed some light on that, please.
Actually, just to give you a background, you know what had happened was the IIFL Holding was a holding company which had 3 broad lines of business, which was IIFL Wealth, IIFL Finance, and IIFL Securities. So IIFL Finance was the consumer finance business, IIFL Wealth was the wealth management business, and IIFL Securities was the securities arm. Somewhere in 2018-19, we had a court demerger in which the shareholders of the holding company got shares of the subsidiaries on a pro rata basis. So now we have 3 listed companies: IIFL Finance, IIFL Wealth, and IIFL Securities. So the profits for this IIFL Securities has absolutely nothing to do with the profits of IIFL Finance or IIFL Wealth. IIFL Finance and IIFL Wealth will announce their results separately. I think IIFL Finance has a board meeting on 27th, and IIFL Wealth is in the first week of February. So there's nothing. So they are completely separate.
Yes, okay, good. Because I just want to make sure, because I know that there's a call on Friday, and it's good that you clarify on that. That's why I want to make sure. That's it. Thank you.
Thank you.
Thank you. The next question is from the line of Kajal from ICICI Securities. Please go ahead.
Hello. Yeah, hi, sir. Congratulations on good set of numbers.
Thank you, Kajal.
Hi. Sir, can we get a breakup on broadly revenue, cash and options? Because as we see, cash is stable and options rising.
Derivative, I think it will be roughly about 50-50 or 45-55. ऐसे ही होगा. Derivatives and cash.
Okay. And institution में तो ऐसे भी we must not be having too much.
100% cash, maybe 99%, or 95.5.
Okay. And what will be like incrementally now we are also spending on technology and upgradation. So technology as a cost in total cost, any color?
See, actually the entire admin cost, technology cost will be the biggest line item. So if you look at it, technology cost is either 20%, no?
Around 20% of it.
Maybe 25-30% you can take as a cost of the technology.
Okay. And any color on type of customers now that we are acquiring? It has gone up in last 2 quarters. So is it just the new plan, like you have also offered discounted plan?
See, actually, if you look at it, the bulk of the customers which are getting acquired is in the discount plan. So roughly, if you look at it, I think 60%, 65%, 70% will be on the discounted plan.
Achha, 70% is. And when we say it's on the discounted plan, like are we exactly matching type somewhere in these pure discount brokers in terms of plan? Or
I think all the pure discount brokers have this flat brokerage plan. So everybody is now in the same boat, roughly speaking. So we are also there.
So, but then incrementally, if we get 70% of customers in this plan, do we see then revenue can't that faster, correct? As you may be having a higher revenue in the old customers.
So as I said, the new customers are contributing little to the brokerage. So it is just a customer acquisition tool, and we'll see the benefits of this customer acquisition in the days to come.
Okay. And what will be the average cost of acquisition like? Is it
average
different?
cost of customer acquisition is roughly about 1,200, 1,300.
Okay. But these new customers which are acquired digitally also are falling in this bracket?
Yes. So this is the cost of acquiring customers digitally, and plus whatever, it's a weighted average. I can't say which is the base, but this is the cost of customer acquisition on the online channel.
Okay. Okay. Again, so you have algo customers in your retail or no?
So we have algo customers, but we don't call them retail because they are reasonably more sophisticated.
Okay. Okay. Thank you. Thank you very much.
Thank you so much.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Vijay Karpe from Branston Investments. Please go ahead.
Am I audible?
Yes.
Yeah. Thank you for the opportunity and very happy New Year to the entire team of IIFL Securities. My first question is, what proportion of our revenues do we derive from flat fees and how much from the percentage? That is first. And the second question is, what kind of growth in the number of orders did we see on a quarter-on-quarter basis?
One second, I'll give you the orders data and the order, no? 14%, no? So we saw the order increase by 14%.
Okay, 14%. And we saw a growth of 8% on the retail broking side.
Yes. So my guess is that bulk of the new order growth has happened on the flat brokerage fee.
And how much do we derive from flat fees in terms of revenues for this quarter?
Sorry, from the flat fees?
Yes.
I don't have the data right now.
Okay.
My guess will be about 10%, but I'll reconfirm and check.
Okay. Also, how much is our MTS book in Q3 and how much was it in Q2 on an average basis and also at the end of period? If possible.
Which one?
MTS book.
MTS book. Once again, I'll give you a MTS book is roughly about 190. 225. MTS for the quarter end was 225.
25. And how much was it in Q2?
150. 190 has become 225.
190. Okay. Great. Okay, so we also talked about the technology investments. So on an absolute basis, how much was it, and how will it help us in our broking business and also in our distribution business? One.
No, sorry. What's the question? Sorry.
My question is, how much was our absolute investment in technology, and how will it help us in our broking side as well as on the distribution side?
See, if you look at our absolute cost, I don't have, but technology investments are very important because in this entire world, for our distribution business or for broking business, UI, user interface, user experience, speed of order execution, stability of platform, all of them are very important. So we have no choice but to continue to invest and upgrade our tech infrastructure.
Okay, so this was mentioned to be 25%, so this is 25% of the other expenses, which were at 58 crores?
Yes, uska 25-30% will be there.
Okay. One last question. Did you see any impact of third wave on the distribution business? And also, how is it looking for Q4?
See, we have no, as of now, it's very difficult for us to comment on the impact of distribution business on the third wave because it is too early, and we have seen the third wave coming in the last week of December to maybe 2 weeks of January. So my guess is that because of customer meetings getting postponed, sale of high yield products will get affected. But as I said, it's too early for me to comment.
Good. Thank you so much.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Bhuvanesh Garg from Investec Capital. Please go ahead.
Hi. Thank you for the opportunity. Sir, can you please provide the breakup of broking revenue into pure retail broking, institutional broking, and institutional IB shared revenue?
See, IB, I gave that income. IB is, brokerage and related income is about 172 crores for this quarter, and IB is about 32 crores.
IB 30 crores. So that is institutional.
So when I say brokerage and related income, broking will be about, out of this 140 crores will be broking, 32 crores is other stuff, which is DMAT and dealer interest charges and all, and investment banking is 32 crores.
Okay, and this 140 crore includes both retail and institutional, is it?
Yeah, it will be about 60, maybe 60-40 split between.
60-40 split. Okay, sir. Okay,
thank you.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Anyone who wishes to ask a question may press star and 1. Ladies and gentlemen, you may press star and 1 to ask a question.
I think if there are no further questions, we'll end the call. And as I said, Anup is always there to answer all the questions. Thank you so much for participating. And Anup, what's your email? Investor.relations at IIFL.com is Anup's email. And whatever query you have, please send it so that we can look into it and reply. Thank you so much.
Thank you very much. On behalf of IIFL Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.